All I can say is Happy New Year to everybody. Glad to be back. It's vacations are needed, but sometimes too long in nature, especially as we find ourselves doing all kinds of different things. But I hope everyone had a wonderful holiday with family and friends, studied up, refreshed, recharged the batteries, and that's what's needed. I'm going to switch over here and get started in the beginning of the first of the year's planning and scanning. So I'm going to stop this projection here. And I'm going to start it over here. And because it's a new year, everything should work just fine. Everything's up, ready to rock and roll, get going. Start desktop sharing, hit that, and we're ready. Sound check, please. Do we have decent sound? You know, some things change and some things never change. I guess it's important to ask for a sound check first before saying Happy New Year, but I just assumed everything was going to work perfect because I'm just starting this year on a positive note as always. Always starting on a positive note, and I think that's what we need to take time off and refresh the batteries. So with that said, I know we weren't around for what I think last week we did have some interesting trades. The markets could have allowed some interesting trades, and many of you probably did trade. I'm sure of that. And I took advantage of that Twitter trade. I tweeted out to get out of it on like the high. So I hope you guys got, I'm not sure, someone got alerted to the tweet trade to begin with. So I assumed if I send a tweet out to get into a trade and then I send a tweet to get out of the trade, then that's pretty good. The only thing I'm left with are the credit put spreads, the 6-4 spread for January, and we'll see how that pans out. Right now, they're up about maybe they're up a dime on the bid, maybe. So with that said, they're down a nickel. Up a nickel on the midpoint. So with that said, buying the calls kind of helped pay for that credit put spread, and I was hoping the market didn't do anything going into the new year, as we have a host of things to look at for this year, this month, this week actually. And let me get this going.
The bond market in here, I'm believing that the high for the year, or this middle of this decade, I'm in the belief that this is the, despite any major catastrophe, black swan events, this is that area that I think on an average of old highs, maybe we could spike ourselves up in here, format kind of longer term double top, possibly that's what we're in for right now. Needless to say, for the bond market, which at this point, weak economic numbers or global weakness, the Fed's going to remain with a lower interest rate environment rather than a higher interest rate environment. So I guess that's what's kind of got people perplexed about the bond market. But needless to say, when we come into a time period on a monthly basis where it's 12/31, where the end of the year we get into a period of weakness. Now we've got the stock market selling off a little bit after the first of the year. We got a little profit taking going on in some sectors in here. So possibly they're just kind of pressuring the bond market. But I want to be vigilant in watching the bonds this week and into next week for signs of peaks, and to be putting on, if we get into a stronger upside, and when I say upside, I mean a move to test this high, which is, again, around that 148, let's call it, round up and say 148. So from 146 to 148 would be probably painful for anyone that was short down in here. So needless to say, I think the overall range for the next, I'm not going to say this quarter, but if you could look up here on a quarterly person's pivots, it's saying 153. I would look at more of the midpoint between pivot and the outside quarterly. To me, that would make a little bit more sense, maybe up to 149. So I want to watch this market for a hyperbolic rally up in here, and I want that, for me personally and my own money, I'll be selling that rally. That's with the way equities are, there's a couple things that I think many of us don't really look at, and it might be the differential between corporate yield and treasury yields. And as that spread continues to widen, it's going to make a very active market for bond traders to want to sell treasuries at that point in time. So that's what I would be, and that's what I am looking at. So just to get that out of the way, what's barreling that market? Low inflation expectations is also helping to make a rise out of the bonds. And so what would that lower inflation expectation be? Well, it would certainly be the relief of crude oil prices continuing to move lower. But this is where it gets a little tricky, because now that you have lower prices, and remember, the longer prices stay down, and at 65, that was relatively cheap compared to where we were at $100. At $70, $80, that was relatively cheap. As we try to get into the 40 handle, that's now getting to the point where you're going to start to see some contraction in the oil industry sector jobs. And that's been one of the strong sectors, by the way, along with baristas at Starbucks, increased labor force there. So my feeling is, with the crude oil and the energy complex, we were starting to form a little declining wedge, and all of a sudden, in one fell swoop today, we kind of took that kind of pattern. Now, how do we trade declining wedges? Just because we have a declining wedge does not mean you go and buy it, right? What do you want to look for? Well, you want to look for the breakout on the declining wedge. So if you start to see a pattern of a declining wedge, then what's exciting about it is the fact that you're going to want to wait for the market to break out. And what would be one point of a breakout? At what level do we get excited about crude oil having at least a strong short covering rally back up into maybe that 60, 62 level? And the answer, in my opinion, and in technical trading, is above the high of at least if you're looking at a declining wedge, you want to be looking at the secondary point or the high of a last conditional change. Now we have two. This did not form a last conditional change. This did not form a last conditional change. This did not form a last conditional change. And the reason is, neither any one of these time periods did we close below prior lows. But that little guy, he closed below that low. This guy closed below that low. So you can either say 55.72, or you could say above the high of 56.69, 56.70, something of that nature in there. And so, but that's a long way from wherever the declining wedge was. Now we got to look for a different bullish setup, because we've kind of taken away that bearish, declining wedge formation. So anyone's guess, whether you're using any technical analysis, what the pressure of the market is to keep crude oil prices continuously to move lower. But there's no doubt that no one, number one, should be picking a bottom in here, because it's going to be very hurtful. But what we want to watch for is that if this pattern, it's a very strong potential breakout. And one of the other things that we want to note is that on this decline, it is not on heavy volume. So we have a very strong potential for a rally coming in on crude oil. Now, from a seasonal perspective, on crude oil, let me get this back into focus. And then we're going to address a couple real new changes that's come into the commodity industry. By the way, we probably exceeded a little downside. We got potential high closed dojis developing in almost all the markets here on a 15-minute basis, the Russell, VES, and the NASDAQ. Let me get back over to this page right here. All right, so daily, even though the markets are not really trading in their holiday markets, right, you still cannot ignore what the advanced decline is. On thin market conditions, maybe they take some stocks down and some stocks not, that kind of thing. But still, we understand where there's light volume readings. I get that. But it's the direction of the volume that's important. So when we look at the S&Ps and everyone says, well, the holiday markets, it's light volume. It is true. It is light volume. But what's the direction of the volume anyway? And so we did get a higher high in price. We did get that higher high, but we had a higher high matched in volume, and we had a higher high matched with the advanced decline, which does not suggest that we have an overall top. Seasonally speaking, we don't have an overall top in the market. So I'm still looking at a buying opportunity in equities on this dip. And some of the stocks, and I will have this list for you ready this afternoon, I will send an email out to you guys, pretty much 90% complete. There's a couple things I want to go through, like some regional banks and things of that nature, and other little sectors like in the telecoms. And I want to also look at and revisit a stock we did well with, if you remember, on a earnings play was JDS Uniphase. JDSU is that stock symbol. So I have a lot of really, I think, great things to start us off on the beginning of the year here. I'm just not in a hurry to jump in, and I hope you're not either, because, I think it's just kind of like take a gauge of what the market's really doing. Crude oil's having more follow-through downside. The first of the year, a lot of traders are coming back today. People have been watching the market. Institutions were obviously watching their positions, lightening their load. Guys like me and you most likely took profits on like that pop in Twitter we got. That was a nice little trade there for the end of the year. And there are a lot of stocks that have gotten beaten up. And in our list of stocks that I've done for you in the last few years, your typical retailers, your Sears, your Herbalife is not a retailer, but it's, they're in Herbalife in I wouldn't call it a pyramid scam. It's kind of like the Amway business model. I forget the exact term for that. But we have J.C. Penney's, we have Yelp is another one that I like from a technical perspective, in the social media area. So we do have a whole bunch of stocks that we want to continue to look at. Semantic, I don't know about American Eagle Outfitters or A&F, but they are on the list. And so when I create the list with you guys, multi-level marketing, John Zaz, exactly. But there is a list of names that I have that we need to go through each and every one and then define if we want to do the stock trade itself or look at an option trade. One thing I think that when I take a look at the way all these indexes are shaping up, the Russell particularly, if this is the year of the Russell, and let me go back to a daily chart instead. If we go weekly, I want to go weekly. If this is the year of the Russell, the funny thing is that it never had a very strong volume breakout. Number one, as you can see. Number two, from the peak in price, we did manage to make a new high close just by a tad. And a tad and then failure does not really spell a whole lot of relief for me. So looking at measuring at the last point of strong volume, meaning the peak or the highest volume reading on any upside move, corresponding with the highest at that point in time of that advanced decline, looking at that level of what we had. And we look over here and we go, well, we did kind of meet it, crooked its head a little bit, didn't quite come close to it. But note that we have a little bit of seasonal strength still left in it. And so for me, I don't think that we're over with the Russell. And if this is going to be the year of the Russell, then it should not really sell off that much, and at least by Friday close below last week's low. So with the Russell, I'm still more bullish on the Russell because of this January effect thing. And looking at today's sell-off in the market, I think we have to, and of course Friday is the market. And then now we also had December 31st, so we had three down days in a row in the equity markets. And I look at the technical behind them, and I go, well, all right, I'm looking at the Russell, and relative in relationship to the other stock indices, we did see a little decline in the AD line. We saw a little decline in volume, obviously. And I look at the New York Stock Exchange, I go, wow, it didn't have as significant of a move, both in volume. I look at the diamonds, and I go, uh-oh, the Dow with the high dividend yielders, sold off, but no volume. I look at the Qs, and I go, potential M-top formation, trouble lies ahead. What would be the number one sector that would get us nervous on the Qs for any major selling? Is it in the technology, or could it be possibly in the one that we've been planning for, and it's in the biotech? So let's move forward into the biotech. So we've obviously done some work on biotech many times, because here it is. I mean, we have a projected trend line up in here, which it hit, as you can see, last week and sold off significantly. If we take a look at where this market is, the length and the duration of what this market can do, I still feel that the biotech sector is one that can see, and clearly, as we made newer highs in the biotech, clearly that's newer highs. It's almost like you can if this market came back into its old support or comes in to meet this upside trend line, it's almost like a, if you think about it, like a box area. So what I'm looking at now, and I see this, I go, wow, that was a pretty big rally, man. Everyone loves that biotech space, and I don't care what time frame we're looking at. I could be looking at daily, I could be looking at weekly, I could be looking at monthly, short term meaning daily, long term, intermediate term meaning weekly, and long term being monthly. There is no way I'm going to have any of my cash working in that sector at this point in time, because this is the one sector that, to me, from any indicator that we actually use, even from a seasonal perspective, about the worst time of the year to be buying this thing is like about now. So, excuse me. Hopefully I covered the mic good enough for that. The biotech sector, and when we look at the NASDAQ 100, and I do this often, and I think it's good to repeat. Where's the NASDAQ 100? There it is. And I look at the NASDAQ 100, so the first thing we look at is, well, what does the better ones look like? Well, Celgene, which our famous TV individual called it the juggernaut, which at the end of the day, you're probably right. It was a juggernaut of a move. At the beginning of the day, though, when he was telling everyone to buy it at 90 and it dropped down to, if you don't use stops, then that's a good thing. But for us, I think we had a better trade in there. I look at this particular instrument, and as you can see, it's had a split last year, but when I look at and then I see, okay, well, if you have a split and you split and you look at the volume analysis and you look at the chart patterns here, every time it seems to rallies, it breaks. It has strong rallies, it has sharp breaks. Notice that. So it's having a hard time. To me, this is what defines a top. What defines a top to me, folks, is that after strong rallies, the market, after strong rallies, it breaks. It rallies and it breaks. It rallies and it breaks. And then it pulls back. What it does after it breaks out is a different story. But I think we have that same type of price action up in here. That's the strongest, almost the strongest one in the leader of this group. Next, I mean, you could look at all the names that are in the NASDAQ Biotech, and we'll go down here, and here's all the names that are in the NASDAQ, which is the NASDAQ, not composite, or it's the NASDAQ composite, it's not the NASDAQ 100. But here are all the names in the NASDAQ sector, and you can go take a list of all these names. Here's Vertex Pharmaceuticals. There isn't a single name that I've found in here that on both a daily or a weekly basis isn't showing significant light volume. Now this is Sagent Pharmaceutical. So, I mean, I've got a lot of work to do. We've got some really neat stuff to shorting opportunities, but it's like I can't sell everything, and I can't buy puts in everything. So I need to filter out, and I've got another week or so to see how this market wants to respond. But when I take a look at a lot of these names, and I'm just going to pick on just, let me go pick on a couple in the A sector. So Acadia Pharmaceuticals. I mean, a market that goes parabolic, has big, strong declines, and goes straight up and then backs off the highs. Look at these long shadows up here, folks. The shadows on these monthlies, I mean, I'm not sure what it is, but you have a big move to the upside, and it's not followed by any strong volume, and you're in a seasonally weak period of time. Here's one, Acadia, that, whether or not it's got good option volume. That's the next thing. So we got a lot of what it is filtering to do. So we can do one of two things. We can look for the best stock that has the best stock in the sense of it's got the weakest to go, right? And you'll get the best performance by picking the stock that's best to be shorted or to be buying puts or bearish strategy, right? And that'll give us our best bang for our buck. Or we can look at just the overall ETF, which in this case is the IBB. IBB. Now, I'm going to come up with a few lists for you. So this week we will have a few names this week, which I believe will give us some good shorting opportunities. This is Biogen. And again, when I look at a chart, and anytime I see long shadows at the bottom, I think, market moves down, long shadows, and it has a nice little breakout. It's got room to run. When I see long shadows, and I see shadows, what do you think I'm looking for now? A breakdown. Now, I know that Biogen is trading up and around 342, but a breakdown below 304, that thing could come all the way back down easily to from 304. We could easily see that market get back into this zone right there for about a 20% correction. So that is my overall outlook on the biotech sector, because that is the one that I least want to be in, and that's based on the way it's been trading, volume number one, the duration of the rally number two, without massive acceleration. So I guess you could say, well, John, this is not massive acceleration. I mean, almost the whole year it's been in a wide range. So this is the, from 2013, Biogen has been from 360 down to 260. That's a pretty wild range. So we're either going to do one or two things. You go from trend, consolidation, you're either going to resume the trend or you're going to reverse the trend. And I think this is the year that we may reverse the trend a bit, back down at least into where we started from in that level. Not a big deal. We can all use our Fibonacci support and resistance and go back and say, well, what would be a big correction for this market? Because after all, we haven't even seen one. Funny thing is the 618 retracement is way back down here. Let me zoom this up for you. We can actually, instead of the first market reaction, take a better look from the absolute lows to the absolute highs. I mean, 50%, 38%, we're right into that zone. That would be a lot on the table to be looking for. And that's the kind of trade that I think is suitable for us as investors to look at and take a part of, and not, what's the word I'm looking for, underestimate. Okay? A market that moves up with light volume, there's a reason behind it. And so when it does go down, that anyone that is long up there is going to get punished. Biogen is, in fact, Biogen is on my sheet. So I am picking on Biogen for a darn good reason, because I've already done my homework. I just got to put it in a nice, presentable page for you guys, and also the timing element. So what I'm doing is I'm creating a list for you, for my members, my clients. It says this is the stock, this is the a sell, this is the week time period. So you have two things going for us. When do we want to be looking at shorting opportunities, and when do we want to see the move happen? So there's two things that I have not done this before. That's what I think is going to be kind of neat. It's taking a little extra time, but it's going to be well worth it. Now let me take a look at some of the social media stocks, and we'll go from there. And then I want to just one last thing. All right. So this is the ETF, SOCL. And it's not that old. It's a relatively newer ETF. But it does have enough, a little bit of seasonality to it. And some of the names in here like a Groupon, which is already, taken a little bit of profit. It's had a little move. It's in a monthly buy mode, by the way, and it had a nice little volume uptick, Groupon. Looking at the daily, look at this. It has a kind of a strong move going into February, right? So Groupon, the daily volume looks pretty good. I mean, if you're looking at this stuff here, I don't know what that tells you, except for there's no, the market went up on week volume and had a little move down and volume. I'm not going to sit here and study that and waste our time. I just think that what I wanted to point out to you is that the real volume trend is up, and it supports the rally. It supports this rally, but it is a volatile one. I mean, it has sharp swings down, explosive rallies, pulls back, explosive one-day moves. That's what it's kind of been doing. So when you take a look at a stock that has a kind of like these wedge formations, or these kind of flag formations, except for they're a little too long for a flag formation. They're the ones that you have to go with and start to look at what's your last additional change. If the market's really going to start to break out, we're going to have to start looking for like the trilogy setup or a wedge breakout setup, okay? That's what we're going to have to start looking for, those types of moves. On a shorter degree time frame, again, remember how I've always taught you guys, I don't look at the absolute high, but the average highs. So if you just blacked out this one day with one anomaly, what's the average of the highs? Is it way up here, or is it way down here, right? So if you take a look at running and start looking for opportunities, and you go to say to yourself at this point in time on a pattern like this, say, well, it actually has very strong volume. The highs are higher in price. The volume is higher in price. In other words, here's the old peak and high. Here's a peak and high. In the volume, there was the peak and high. And in volume, it had a much sharper peak and high. Right here. So again, volume is doing what? Confirming price action. So this is just a stupid little trade. I call it stupid because it's Groupon. And I don't, be honest with you, I don't think I've ever used Groupon. You're supposed to buy it to get a discount at a restaurant. But, needless to say, they kind of seem to have liked this market. Markets made newer highs, and so did the volume. So what do you think I'll be looking at on a pullback in this market? I'll be looking for a buying opportunity on Groupon. So, and guess why I'm showing this to you? Guess why? Paper ruffling, it's on the list. So we have a lot of really neat opportunities. Now, I could throw out 100 sells and 100 buys to you guys. How many people do you think are going to take 100 stocks to go long and 100 stocks to go short? Probably nobody, right? So the filtering aspect, and this trade's not ready to be ripened, so it's got to be on a watch list. So this week we're going to have stocks to be entered into this week, stocks to be watching over the next 2 weeks. So when I talk about Groupon, I mean, it's not going to be a huge stellar move. I'm looking for maybe a pullback to the 740 handle, and then I'm thinking that this stock's going up to maybe 960. Why 960? Well, if you take a look at a weekly chart, there's a benchmark. Middle of the benchmark should act as resistance. We also have this thing called 945. We take a look at our quarterly pivot resistance, and we're even 1060. But I think that the market's going to get right up into that middle of this weekly benchmark, right into that area. Old support, old resistance, into that area, 960. Now, that's not a big move, I get it, but it's a huge percentage move. And I think the volume analysis warrants this potential trade, okay? So with that said, that's one reason I like Groupon. If we take a look at Yelp in the social media space, well, we don't have the breakout yet, but what is nice about Yelp, downtrend, what's missing? Closing breakout above 57. That would be the trilogy trade setup right there. So, unless we get a PPS buy signal, again, this is a weekly chart. Let's take a look at a daily chart, and you can say, oh, yeah, look at that. That looks reasonable. I mean, you got to admit, that looks reasonable. What was up here? Here's the last conditional change on a daily chart. It shows on the weekly chart. So if this thing can finally get some gumption and go and get some volume ahead of it, then I think we've got a decent trade on Yelp as well. And that would be up to 69. So I've got a couple of the social media stocks that I think should do well for us as we move forward. Now, Twitter, I'm in the 36-34 credit put spreads. And if you followed me on that trade, I did two things, and I mentioned in the room before we left for the holidays. I said, I'm going long Twitter on an outright call, and I'm also doing a credit put spread. I tweeted out, I got out of those long calls, and I mean, it couldn't have been better. We got out right here. And I said, but I'm holding the credit put spread. And the reason is I wanted to get through the holidays. And so far, you know, all we're doing is burning off time. And that's cool. Now, if this is another one, Twitter is another one. And I know there's a lot of, I saw over the, you know, and I watch the news just to get a kind of a feel of what people are, you know, thinking and what the media is really talking about. But if we get a move above that sell signal and that last conditional change, Twitter, I'm thinking we have kind of a dynamic situation for it to finally come back and fill that gap. Double check something. Auto scale. There it is. It went off the reservation. Not sure why the volume went off the reservation. We wanted to see this. So the first thing that I want to see is this market, is it going to move up? And we have a high closed doji. And if we get a high closed doji, is now Twitter the one that finally breaks out above the highs of the holiday high, let's call it the holiday high, and gets back into the 44, or at the very least come in and fill the gap up in here, and that's what I think we're due for. So Twitter is another one I think we're going to have. So like I say, I have a slew of stocks that I really like to buy. It's just, we've got to nail it down to the best possible ones. My filtering element is going to be seasonals, volume, and higher degree time frame patterns, both daily and weekly, just like we did when we were trading on earnings. And that leads me to my next subject, is we've got earnings coming up, believe it or not. So I hope everyone had a really good rest-up holiday. I know this is a longer than usual planning and scanning, but between the stock market kind of selling off on certain sectors, and of course the energy complex, really taking it a little bit of a hit. Crude oil, I think we got to keep our eye, last but not least, we do got to keep our eye on crude oil. The best time of the year to be buying crude oil, when? February. And February, I can't believe it's the 7th of December, or January. But, this little gap could be I don't think that this is your a breakaway gap. I think that's more of the exhaustion gap. You can see here we had a 3-gap method. You broke down below an old support. So in old school technical analysis, you had old support and you had a potential breakaway gap. B, you finally had this huge what we would consider, because even though this was a gap here, it got filled, right? So take a look at USO. This is an unfilled gap here. So that's numero uno. That's numero dos. This isn't quite large enough gap, but now if this does not get filled in the next 2 days, we may have, and again, if you take the measurement technique from here, double check me if I'm wrong, go to the midpoint. Go to the midpoint, you'll note this is the actual area of measurement of the objective of a 3-gap method in the oil, and this is USO. Another thing that I think is interesting that's setting itself up for is the fact that we have strong volume convergence. So to me, this is not something that I'm willing to get short on. In fact, I'm still looking at this as a strong potential that I think by April, because the February, think of it this way, if the best time of the year to be buying crude oil is around the first week of February, it could be a little early. They may have done a little too much more technical, maybe there's technical damage, people got in there, I'm not sure. But we want to watch this over the next 3 or 4 days. But needless to say, that 2135, I'm saying that that was the daily, the weekly on balance volume is still showing that convergence as well. But I'm saying that easily by I don't think April, it would be hard to see crude oil to get back to about that 26 handle. So there's an opportunity that we have to say, okay, I don't know what the risk is. That's the problem. So I want to use a defined option strategy. But boy, when I do get that trigger to go long, I can tell you this, I want to be more directional in nature, and we want to be watching USO for breakouts above the high of 2095. All right? And that's USO on a breakout above 2095. A breakout would be, you can utilize, unless we get a better setup, a cheaper setup. If there becomes another low close doji, or high close doji, or something down in here, another trigger. I'm getting ready to get long USO in here, okay? So that's another strong contender on the buy list. USO, not crude oil, USO.